Good morning, everyone, and thank you very much for joining me. This is the morning market review. It's Friday, it's the 27th of January. My name is Russell Shaw, I'm a senior market specialist at FXCM. My email address is r.fxcm.com. Just going to go ahead and bring up the high risk investment warning, and I'll keep this on screen for a few moments. Hey, Howard, morning to you. Okay, excellent. It's giving me the 3 yeses. And let's go ahead and bring up our market commentaries disclaimer. Just reminding you, if I'm not looking directly at the camera, I'm just looking between two monitors here. All right, good morning. Hey Mia, nice to have you on the webinar. Hey Endrin, nice to have you on the webinar as well. Thank you everyone for joining. Appreciate your time. All right, and the reference is Market Scope and Trading View. And what we'll do today is just go through, I think, a few interesting relationships leading into next week. So the first relationship is a relationship we monitor all the time. That's the real rate versus the NASDAQ. And NASDAQ to me is becoming very interesting. You can see that as the real rate is coming down, let me put an arrow in here. So when I say coming down, we've got this lower peak, right? Got that lower peak. So as we've got the lower peak, we've got a higher trough. I beg pardon, on the NASDAQ. So they're moving in opposite directions. In other words, there's an inverse relationship. We've got the correlation coefficient underneath, it's a negative 70%. So it's moving very closely together, just in opposite directions. And what I've drawn here is just the horizontal on the real rate. This is what we've got to monitor next week. Next week, we've got the Fed on Wednesday. And if it comes in dovish, I want to see if we take out this low, because if we take out this low, then we've got a lower peak, lower trough. That's a downtrend. But if we've got a downtrend, and this is obviously a big if, right? We've got to see what happens, but I suspect we are heading towards that lower trough. Then the NASDAQ is pretty close to getting a higher peak. Well, that's an uptrend. So I guess the interplay or the intermarket relationship between the real rate and the NASDAQ, which is a growth index, is something which is of interest to me at the moment. And that's because of the time value of money, which we won't go into the mathematics now, but growth stocks, growth indexes are very sensitive to interest rates. So that's what we're seeing here. Now, let's go through to the next chart. And the next chart here, I think, is the next piece of the puzzle. And effectively, what we have here is the NASDAQ versus the Dow Jones. Okay. Now, this is very, very important in my opinion. It's how has the NASDAQ been performing relative to the Dow, or if we put it another way, how is the growth market performing relative to the value side of the market? And between the 22nd of November 2021 and January 23rd, so about a year and a quarter, roughly, right? We've got the NASDAQ severely underperforming the Dow Jones, outperforming the NASDAQ. But that looks like we may be, that may be changing. You can see that we have now got the relative strength movement from zone 3, the lower zone, that's between the lower blue and lower red, but it's moved now into neutral. And it may be making its way to zone 1, which is the area of strength. In other words, NASDAQ may be starting to take leadership here. Now, there's only, in my opinion, one reason why the market would be suspecting that the NASDAQ is going to outperform, or let me say this a different way. To me, there's only one reason why I think money is being allocated to the NASDAQ, and that's because the market is of the opinion that the pivot is a reality. Now, I don't know if there is going to be a pivot or not, but I suspect there's going to be a pivot. And I'm going to put subject to correction. Now, if there's a pivot, then the NASDAQ is obviously going to be a beneficiary there. Now, the question is, why would I think that there's going to be a pivot? Well, we've explored the Fed's funds futures, and there's a pivot that was priced in around about June. But something happened this week, which I think is worth mentioning, and that is the Bank of Canada effectively hiked rates by 25 basis points, and it has effectively said that's their peak, and they're going to be monitoring now going forward, but they're not looking to hike rates anymore. Well, this chart here, to me, is very interesting. This chart here is the US 2-year yield versus the Canadian 2-year yield. So it's the spread between the US and the Canadians on the short end of their yield curves. Now, what we're looking at here is, why we're looking at the short end of the yield curve is because that's where the central banks have the most control, okay? Now, what's been happening here is it's been moving pretty close, the spread, okay? The spread is moving sideways. Yes, there are variations to the top and to the bottom, so there's oscillations. I get that, but by and large, it's moving sideways. Okay? By and large, it's moving sideways. In other words, they're moving pretty much in tandem with one another. Now, if the Bank of Canada has said that they are looking to pause, okay, and if this relationship's to continue, well, then the Fed needs to follow suit. The Fed needs to pause as well. So this is a very interesting chart. Now we've got the Fed coming out on Wednesday. That's the 1st of February, okay, and you know, the question is, are they going to still be talking a hawkish game or not? I think there are pockets of weakness that are coming into the market. Specifically, what happened yesterday is we saw core durable goods shrinking. We saw, even though the GDP came in positive, when you dig into the GDP, what you actually see is that there are there's high inventories. Okay, I want to talk about that in a moment because I think there's a hidden weakness there. But just before we talk about the GDP, let's just not lose track of what we're talking about here. We're talking about the fact that the US 2-year moves very close with the Canadian 2-year, and the Canadian Central Bank has now indicated that they have peaked, and now they're monitoring. Well, that I think gives us a reason to suspect similar next week. But then on the 2nd, we get the ECB, right? So we get I suspect, and I'm going to put subject to correction here, a more dovish Fed that we've seen previously. The hike 25 basis points as opposed to 75 basis points. That's a big difference. But then come Thursday, we get the ECB. I think the ECB is going to be hawkish. So if the ECB is going to be hawkish, okay, take a look at the Euro-US dollar. Well, the Euro-US dollar, we're looking at the monthly chart here. Well, that's also jumped from zone 3 into zone 2. That's relative strength. Take a look at the German 2-year versus the US 2-year. That's also moved from their weak zone into their neutral zone. So it's actually telegraphing the relative hawkishness of the ECB, and the euro is responding. Now, as long as we continue to see strength in the spread between the German 2-year and the US 2-year, I think that denotes or connotes rather relative hawkishness for the ECB, and I think the Euro-US dollar responds there. So we've got some very interesting relationships there. Okay, so we've seen the NASDAQ now starting to buy into the pivot. We've seen that the Canadian central bank has signaled its peak. Well, the US central bank is moving pretty closely to the Bank of Canada, and now we're seeing the divergence between the ECB and the Fed. So this is all flowing into next week. Now, let's just talk about inventories, okay, because I think that it is quite an interesting story there. I'm going to just bring up Microsoft Paint, and effectively what happens is there are going to be two parts of the business cycle when inventories are going to jump. So inventories jump sort of across a, let's call it a baseline at the beginning of a cycle, near the beginning of the cycle, and they jump above the baseline towards the end of the cycle. And they're jumping for two very different reasons. The first jump, okay, is because inventories are being built up in anticipation of a stronger market. So it's the first jump is happening pretty close to the trough, okay, of business cycle, sort of right in the first segment of the appreciation or the market phase. The second jump happens when there is a market decline in consumption. In other words, the jump in inventory is not planned inventory expansion, it's unplanned. It means that there is unsold inventory. It's a precursor to recession, okay? And I think that's what we're seeing here. And if you take a look at the GDP, there was a consumer component that missed expectations. So consumption missing expectations, jump in inventories, I don't think that sounds all that healthy. And then we've got core durable goods, which is effectively a measurement of investment in the economy, coming in at minus 0.1 month on month. So not great data coming out of the US yesterday, and that's ahead. Okay, that's ahead of the ECB, of the Fed, and we've already seen that one of the central banks that's moving pretty much in line with the Fed, Bank of Canada, suggesting, well, we've done our job for now. Now it's time to monitor. So I think next week's going to be a very interesting week. Now there's risks involved because if whatever happens in terms of the hypothesis, so if there is an actual surprise, in my point of view, if there's a surprise and they are hawkish, then we're going to have to revise the analysis. The analysis is going to change. Okay, but leading into next week, if we bring up our main layout and just take a look at what's happening with the US dollar, and what we saw earlier in the week was that there is this thick line of support turned resistance. We actually identified this. And not only did we identify it, it behaved pretty much as expected. You kind of hit the resistance, came down, hit the resistance, came down. It's hit resistance again. Okay, so now I think that it's worth just keeping an eye on the moving averages to see if they turn over, and it's worth keeping an eye on the stochastic to see if it turns over. Then we get a trend signal and we get a momentum signal. I beg your pardon. If we take a look where it's trading in the weak zone. Okay, so that's what's happening with the dollar, what's happening with the euro as we move into the morning session. Okay, so just bringing up the euro. Well, we're trading in the bullish area on the daily. What's happening on the hourly? Well, it's looking like we've hit the dollar is hitting resistance, while euro is hitting support. Okay, and if the euro is hitting support, then it's worth a time watching for a trend signal. It's worth a time watching for a momentum signal, and then it's worth a time watching for a confirmation for it to move into the upper quintile. Okay, so we'll just keep an eye on that. We haven't got the signals yet, but I think that it's going to be very interesting to keep an eye on that. The last chart we're going to look at is going to be the DAX. Let's just get an idea of what's happening. We've got about 4 minutes to the cash open. So we're in zone 1. There has been a loss of let's call it a loss of interest because we've got very small real bodies. We are in the upper quintile, so there is an underlying bullish momentum there. I think it all comes down to what happens on the hourly chart, and this is a little trickier. What we need effectively for the DAX to have some sort of swing to it, we need the stochastic to hang out at the 80 area. So it's rolling over, so just be careful there. And we need the EMAs to start showing some angle and separation to the upside. So if we get the angle and separation to the upside, and if we get the stochastic hanging around the 80 area, then we are possibly in for a better showing on the data after about a week of very sort of mediocre movement, neither up nor down, just sort of drifting. All right, so interesting end to this week, but more important, an interesting start to next week. I think a lot's going to happen next week. If there are any questions, please go ahead and type those in. Any questions? Please go ahead and type those in. All right, nothing coming through. So let's wrap up here. I want to wish everyone a good day ahead, a good weekend ahead. We're going to catch up Monday morning. Yeah, Raj, have a great weekend and chat to you guys on Monday morning. Cheers, guys.